because we're speaking with one of the largest public sector banks in the country, Punjab National Bank, next. Remember, last time when we spoke with PNB, post their fourth quarter performance, the management told us that they're confident of beating their FY26 credit growth guidance of 11 to 12%. Now, of course, there is RBI's double bonanza. So RBI is really pushing the pedal as far as growth is concerned. How's the outlook looking for them now, and what changes have they made as far as their borrowing mix and, of course, lending rates, etc. are concerned? Let's get an update. Mr. Ashok Chandra is Managing Director and CEO at PNB, and he's with us now. So, good morning. Great to have you with us here on the program. Thanks very much. So, just give us the basics, sir. Across the liability profile and the asset mix, what are the changes that you've made since the RBI moved?
First I will talk about the liability side. In fact, on 12th of April, which was our foundation day, we have initiated a lot of new initiatives backed by the digital side now. And all my CASA products are revamped now today. And we have the special products for all the segments like salary, non-salary, women, youth, defense, pensioners. Even for farmers, we have come out with a new scheme. And I can tell you the success of that scheme that in the last 1.5 months itself, more than 6.5 lakh new accounts which we have opened under this segment. With additional, the saving portfolio in the individual has grown up by 1,000 crore. So we are mopping up the SB individual with the revamped saving schemes which we have brought it in the system. So we are very confident. The liability side, we don't feel any challenge. We have the enough liquidity in the system. Now, as far as the RBI announcements are concerned, I think we must appreciate the very credible move RBI has made by reducing the repo rate by 50 basis points. And if I see that entire the calendar year, almost 100 basis point reduction has happened. Definitely for 1 or 2 quarters, means Q1 and Q2 of this financial year, definitely the NIM is going to be impacted. But this is all the journey, and we are planning to adjust this the gap which is going to happen in the NII and the NIM by reducing some of our deposit rates. I think in the last week of this month, we are going to have the ALCO meeting, and then we are going to decide about our various rates now.
So just one thing. So Q1, Q2, maybe there will be some impact on NIMs, but
yes,
once you make the changes to deposits as well, will there be any durable, sustained downward pressure on NIMs, 10-15 basis points, or you think,
See, in the shorter period, definitely the Q1 and Q2, there is going to be impact on our NIM by 5 to 7 basis points. But we are expecting that 2 moves which have been made now. One is that 100 basis point cut in the CRR. I think 15,000 crore amount is going to be released in a phased manner from September to November. And definitely that is going to add to my interest income, because whatever is there in the CRR, we are not going to any income out of that. So we will be able to lend this 15,000 crore and we will be able to generate some income. That is the one part. Second part is that we are going to reduce the deposit rate also, keeping the inflation in mind and the repo rate coming down. I think we are going to take the view on our entire deposit rate, including the saving deposit rate. So that also impact we can see from the Q3, Q4 onwards. More so, I think Q4 onwards, definitely there will be a credible improvement in our NIM will happen. All those impact will happen from the Q3, Q4 onwards.
Well, then just a 2-part question on that one. One, because you will get increased money from the CRR that will come by to you, the reduction in CRR. Would you up your loan growth guidance this year, because you will have more funds to earn interest on? And the second part is the savings rate cut. We recently saw the State Bank of India cut savings rate to 2.5%, which is the lowest that we've ever seen. With you cutting it further and the street, looking at other alternatives to invest their money, could there be a risk to your deposit growth as well? Because at 2.5-3%, people will find it very unattractive to put money in the banks.
First point is the credit growth. I think already we have given the guidance that around 11 to 12% credit growth will happen. And we are hoping that definitely further improvement will happen with our credit growth, because a lot of MSME and agri outreach activity bank has initiated. And I'm seeing a lot of traction that is going to happen. I think those results you can see in the Q1 quarter itself. I think that growth, MSME, retail and agri, I am expecting that there will be a good growth in that particular activity. As far as the corporate book is concerned, I think last time also I had mentioned that we have 1,35,000 crore of sanctioned of the last year plus this financial year. That sanction is already there with us, and I'm expecting, and already the movement has started, that the disbursement will happen in this quarter and the Q2, Q3 quarters. So we have a good pool of corporate book also, and I'm very confident that with all those initiative bank has taken and the outreach activity bank is doing it, I think we will have a very reasonable and good growth in the credit system now. And with all those moves RBI has made, I think definitely the credit offtake will improve, no doubt about it. Now, as far as the deposit part is concerned, we have a good, the liquidity is there in the system, and we don't see any challenge in deposit mobilization. Definitely, I think we are looking into the deposit rate cut, including the saving rate cut. Our ALCO is going to meet on the 30th of this month. And then considering all those factors, the scenarios of the repo cut and the inflation, I think we are going to take the view, and then we will announce what are the percentage of cut that is going to happen in the system. But definitely there will be some cut in the deposit, including the saving deposit.
All right. Hi, Mr. Chandra. Good morning and good to see you, Ben. Could you tell us, with regard to your loan book, how much of it is linked to EBLR and how much of it is linked to MCLR? If you could give us that breakdown. And incremental loans, what are they going to be given on? MCLR?
Yeah, we have around 44% linked with RLLR, that is the EBLR. And around 50% is linked with the MCLR, remaining is with the base rate and the fixed rate. So repo rate cut, definitely that has got the direct impact on our 44% loan book. And that's the reason I'm mentioning that around 5 to 7 basis point, keeping everything constant, I think 5 to 7 basis point NIM will shrink. But with the deposit rate cut and the other activities which we are doing it, I think we will be able to mop up our the income. And definitely, I am very confident that overall operating profit and net profit, we will hold on to the level which we have shown in the Q3 quarter.
Okay, all right. So if you could give us what on an average for the year, in the near term, you're seeing 5 to 7 basis points, downtick on NIMs. But on an average for FY26, how do you see the NIMs pan out? Point number one.
I think, the guidance which we have given in the beginning of this financial year, that is the 2.8 to 2.9, I think we are definitely going to hold on this level now.
All right. Your ROA, you want to push it to around above that 1%, guided band.
Yeah.
What are the levels you have in store? Yeah, please go ahead.
We have given the guidance of 1%, and I'm very confident that this guidance we will be able to hold on because there are two initiatives which the bank has taken. One is that the recovery, the activity which we have sped up. I think if you see our recovery in the Q4, there was a TW, or technical right of recovery itself, was around 1,800 crore, and overall recovery was 4,500 crore. And this financial year also, we have given a guidance of 16,000 crore of total recovery and 6,000 crore of technical right of recovery. And we are on track on that in this quarter also. So that is one thing which is going to add to our operating profit and net profit. Second, we have built up a very, very strong treasury book. And I think that is also going to help us in maintaining our operating profit and net profit in this downturn scenario of the NIM also. I think we will be able to hold on to our operating profit and net profit with these two initiatives the bank has taken.
All right. And final question, Mr. Chandra, before we leave you, the stake that you have in Canada HSBC Life Insurance, they've filed for IPO papers. By when do you expect, the IPO to happen? And how much money do you expect to mop up through this offer for sale?
It is likely to happen in Q3. That is the way it is happening now, as of now. And we are very hopeful that at the end of Q3, definitely this process will be on now, and we will be able to see some result out of that. The quantum, I will not be able to quantify today. I think just wait on some time, and then we will be able to tell how much we are able to realize. But definitely,
you hold about 23% stake in this, right?
Yeah, 13% we are going to dilute, and our holding will be around 10% after the dilution.
Okay.
Right, Mr. Chandra, just a couple of more questions before we wind down, sir. Which segment for you is going to do the best? Is it, and I want specific comments on gold portfolio as well, because there also we've seen significant relaxations by the RBI. Could you give us a sense, first, which of the segments to your mind will grow the fastest, and then a bit of gold. What is the portfolio? How do you see growth there?
Two segments we are pushing very hard, and I'm very confident that will grow at a very faster speed. One is the MSME segment because of our digital initiative. Up to 25 lakh digital onboarding is there. No document is required. Anybody can apply it through the digital channel through going to our website. And within 5 to 10 minutes, we are going to give the sanction to our existing customer. And to the new to bank customer also, it just requires 24 hours to give the sanction. So this is one activity we are going to push it in a very, very hard in the entire country. And for that, lot of initiative outreach activity where our entire head office team is visiting in the field and getting the proposals. So that is one activity. Second one, another important activity is the self-help. That portfolio we want to grow up in a very, very big way. And I'm expecting that in this financial year, around 40 to 50% growth should happen in the self-help group and the farm mechanization loans. So these are the two very top priority activity which we have assigned for ourselves, and we are going to drive it in a very, very big way.
And gold, sir?
Gold, see, geographically also we are not very strong. We all know that most of the gold loans are happening in the south states now, where our presence is not very strong. And gold loan book, if you see traditionally, we are growing at 11 to 12%. And we are going to grow at this speed only. 12 to 13% growth will be there in the gold portfolio.
All right. So fair enough. Got that. Just one last question, sir. And this is slightly off now the core banking function, but it's important.
Yeah.
We've been reporting on the insurance side, right? I mean, the government was not happy with the bank assurance channel being pushed in a very big way. But I think there has been a bit of a change of mind there, and what we understand is that the government is told, especially PSU banks, that along with your core banking function, insurance for all by 2047. That's government's goal, and banker channel is pretty important for that. Has that communication come through, sir? I mean, is there a what's the status?
See, the direction was that let us restrict the mis-selling. We should not do the mis-selling of the bank assurance product. That was the concern of the government and the regulator also. And we are very much mindful of those concerns. And in our bank, we are very, very strict about the mis-selling of the insurance product. Those customers who are willing to buy our insurance product or any other bank assurance channel or bank assurance products, I think definitely bank is there to offer those products. We have a tie-up arrangement with various insurance companies. And anybody who is looking for any bank assurance product, we are there to sell those products. But absolutely, we are very, very tough on mis-selling. And I don't think any mis-selling is happening in PNB.
Okay, so it's only mis-selling. It's not a step up in overall push. I mean, you're saying it never really stopped in that sense. And the volume of policy sold, that push has been there and it will remain there.
Yeah, definitely. And concern was only mis-selling. And the direction was also how to stop the mis-selling. A lot of initiative which we have taken, like we are taking the mandate from the customer through the OTP, and unless and until customer agrees for that, our no branch is able to sell any insurance product to any customers.
All right, Mr. Chandra, extensive conversation, but thank you very much. Very useful. Appreciate you joining us here on CNBC-TV18. So that's banking.